It's been 1 month since the SEC's approval of spot Bitcoin ETFs. Since launching, funds have pulled in nearly $3 billion in inflows. It's according to CoinShares. Today, Bitcoin prices briefly topped $50,000, boosted in part by spot Bitcoin ETF inflows. Joining us now for the latest pulse on all things crypto is Dante Cook, Swan Bitcoin head of Swan Business, along with Sean Farrell, Fundstrat Global Advisors head of Digital Asset Strategy. Guys, welcome both of you to the program. And Sean, maybe I'll start with you. You know, it has been, Sean, about a month since the SEC did approve these new spot Bitcoin ETFs. What have we learned so far, Sean? Granted, early days, but what have we learned so far about demand for these new products?
Well, we have learned that, bringing BlackRock into the equation is significant. We've learned that there is demand for these products. And we've also learned that people, generally like low-cost liquid products over, other products that might be more expensive and not, track the underlying asset as effectively.
Dante, is this indeed the reason that we have seen Bitcoin rallying like it has been, or are there other factors going on that people should know about?
Well, there are a lot of other factors outside of just the ETF inflows, although that is a massive reason why you're seeing a lot of this price action, because these ETF launches have been historic, right? There have been over 5,000 ETFs launched over the last 30 years. And FBTC, Fidelity's product, IBIT, Blackshare's product are number one and number two of the most successful ETF launches of all time. And so, just like the Chiefs and Patrick Mahomes won back-to-back championships, these last 2 weeks, you've seen back-to-back historic levels of inflows and dollars moving into this asset class. And when you attach that to things like the Bitcoin halving, where the supply of overall Bitcoin will get cut in half right around April, you're seeing a massive inflow of demand, institutional and retail, hitting a supply shock. So I think there's a lot of different factors there.
And Sean, I'm curious, Bitcoin jumping to 50,000, first time in more than 2 years, Sean. Where do you think the price heads from here, at least in the kind of near to intermediate term? What are the puts and takes we need to consider?
Yeah, look, so we start our analysis is based, we always start with macro, right? And we saw some potential turbulence heading into the year, thought we were heading higher. Our price target for the year was 125, certainly not in a straight line. But a lot of that turbulence, in our view, was going to stem from a repricing of the timing and frequency of any potential Fed rate cuts, as well as potential upward pressure on the long end of the curve due to any potential increased coupon issuance from the Treasury. And if we look at what has happened over the past several weeks, from right before the ETF launch up through today, we've kind of withstood a pretty constant barrage of negative macro variables, right? We've had a pretty massive rally in the dollar. We've priced out most of the excessive rate cuts that I just mentioned, that I just alluded to. And we also had some upwards movement at the long end of the curve. And so all that considered, it paints a pretty constructive picture that, having just gone through that, being at 50,000, that gives me some confidence that this rally, in the near term certainly has some room to run.
Dante, that said, we've seen that happen with other risk assets too, right? In other words, stocks have also been rallying in the face of some challenges here. And so I'm curious going forward, what are the biggest risks that you see to the continued rally in Bitcoin and crypto more broadly?
Well, I think the big risks, like Sean mentioned, are really macro things. But when you take a step back and you look at Bitcoin in general, it has commodity properties in that it has a finite supply. It's not controlled by any one party, yet it has this high beta aspect to it that it rallies when you have liquidity enter the market. And so one of the things that we look at pretty closely and that Bitcoin's price closely tracks is global M2 liquidity, like into the market. And so if we have, the Fed, which Jerome Powell on 60 Minutes last Sunday mentioned that they were going to have rate cuts this past year, and you talk about those things, like Bitcoin is the fastest horse in that race. And so if we have, pretty quick and pretty severe Fed rate cuts, interest rates go lower, we should expect to see Bitcoin's price go higher. But I mean, the macro backdrop, I mean, when you step back and you look at things, you have mortgage delinquencies, skyrocketing, you have auto delinquencies skyrocketing, you have credit card debt reaching over $1 trillion, you have government fiscal debt reaching over $1 trillion in terms of interest payments. You have unemployment numbers, quote unquote, being strong. But when you actually look at the data, you have a lot of jobless claims. You have a lot of part-time workers, not really full-time workers in jobs. And then the jobs that you do have are a lot of government workers related to snowstorms and things like that. And so when you look at the backdrop of the economy, right, things are not overall as strong as maybe the picture that's being painted. So Bitcoin, like other assets, like we're beholden to a macro market and environment. But as Bitcoin is beginning to show, especially with these ETF flows, like you're starting to see an element where Bitcoin decouples from other risk-on assets because it's an entirely different asset class unto itself.
Guys, thanks so much. Appreciate your perspective on this. Dante and Sean, appreciate it. Have a great day.
Thank you.